So what I'm going to do is I am going to flip a coin. Now, depending on the way the coin lands, I'm either going to be buying calls or puts. We'll enter the position right now, and then at the end of the episode, we'll look at it, and then I'm either going to be up or down a substantial amount. So we got filled.
All right, well, there we go. This is actually really interesting. We've never done this before. Are you gonna like have a stop loss or anything? Or are you just going in raw?
No, we're just, so what I'll do is I'll close the trade at the end of the episode, depending on where it is. All right, what's up? Welcome back to the Daily Traders. This is episode number 14, the Daily Traders podcast. 1-4, wow, we're moving.
I know, it seems like yesterday we were on episode 3. So it's crazy. Well, Mark had a brilliant idea on how to lose money.
I did.
If you want to elaborate on what you're going to do.
So what I'm going to do is I am going to flip a coin. Now, depending on the way the coin lands, I'm either going to be buying calls or puts on QQQ. Okay, so we'll enter the position right now, and then at the end of the episode, we'll look at it. And then I'm either going to be up or down a substantial amount. All right, a little disclaimer. We are not financial advisors. We cannot give financial advice.
No,
Nothing we say should be taken as financial advice. The full disclaimers is in the description below, so read that before proceeding. All right.
Peace.
On with the episode. Yeah, so a little disclaimer. All right, this is obviously gambling. I don't want to encourage anyone to do this. This is like purely for entertainment purposes only. I thought it'd be fun. We did the same thing with one of our YouTube videos. In one of our YouTube videos, when I taught my friend how to trade, he put $500 on some risky, I think it was Apple calls, and then we checked on his position at the end of the episode. So yeah, don't do this, okay? This is not like financial advice or anything. This is just, I'm like 100% ready to lose this $1,000 that I'm putting on this position. Okay, so let's just say, okay, I trade with a $200,000 account, so I'm putting on a 0.5% or 0.5% of my entire account size. Is that the right way to say it? Yeah. That. Risking 0.5% of my entire account, not half of my account, 0.5% of my entire account. So high risk play, high risk reward, complete gamble because it's a coin toss. But we're being careful when it comes to position sizing. Obviously, I'm not exposing myself on this trade.
Are you screen recording or we
I can screen record it if you don't believe me. What? Yeah, okay. Screen recording, coin flip again.
Wait, let me see it. And we never established.
I did. So it's heads. So let me look at my notes. Okay. So flip, heads, calls, tails, puts. So we're buying calls. And I said we're buying the September 16th. We're saying 2 weeks out. They're risky contracts when it comes to options. The further out the expiration date, the safer.
Yeah.
Why is that? You want to just like little quick lesson.
So pretty much it has longer to reach its strike price, so they're not as volatile. It's decreasing the delta, so if the position moves against you, you're not going to be losing as much of the contract.
And then you're paying to play. So theta, one of the other Greeks. Yeah, so it's less each day. You're paying to hold the contract the further the expiration. So 2 weeks out, roughly. Okay. And we're going to buy one contract in the money. Now, that's safe. Okay. In the money, out of the money. You want to explain briefly?
So in the money, if it's a put, it is below the strike price. Or sorry, well, I guess technically, directionally speaking, if it's a put, the price is going to be below the strike price. And if it's call, the price is going to be above the strike price. Therefore, because when an option is above a strike price for a call, that means it is in the money. And when it's below the strike price in a put, that means it is in the money. And when it is outside of those ranges, it is clarified as out of the money.
So
the further in the money a contract moves, the more value it's going to be. And same thing, if it goes out of the money, it's the less valuable it'll be.
Yeah, so there's intrinsic and extrinsic value depending on whether you're buying in the money or out of the money, right? There's inherently less value in the contracts that are further out of the money, but the chance of betting on the, stock to move toward that number, whatever the strike price is, it's going to gain that much more. Whereas choosing a safer contract, which is in the money, which is below the current price the stock's trading at, right?
Exactly. And one of the reasons why you see that value based on in the money and out the money is due to ITM percentage. So the percentage when the contract expires, if it's going to be in or out of the money, because as we know, when a contract expires out of the money, it is worthless. So the only worth when a contract expires is how much in the money it is, because theta has completely decayed. So therefore, when it's in the money, you are therefore presenting less risk.
All right, so let's buy September 16th. Okay, let's see. September 16th. Wait, hang on. Okay, September 16th, QQQ. One in the money is going to be the $294 strike price. Let's see. We'll put 1,000 on. Oh, these are they're $687. So $687 a contract. So should we just like round up?
Yeah,
and get two?
Buy two of them. For people who don't know, options are leveraged 100 to 1. So if you see a contract that is worth $1, because it's leveraged 100 times, it is actually worth $100. So these contracts are not worth $6.87. They're worth $687.
And yeah, these are moving around a lot. So we'll buy two. We'll try to get filled. I'll just get a higher fill. 690.
So also, I mean, I guess we can kind of explain
just filled.
When you are purchasing a contract, an equity, futures, there is the bid and the ask. So bid is what the buyers want, ask is what the sellers want. So as a buyer, the closer you go to the ask, the more likely you are to get filled. So if you place a market order, you are most likely buying for the ask, and fair value is considered as the mid, which is between the bid and the ask. But did you place a limit or a market order?
I just went in with a limit, but I just went a little higher to 690.
Okay, so
they were going for
market
within a couple of dollars.
Mm-hmm.
Yeah, so we got filled.
All right, well, there we go. Let's put your phone down.
Okay.
Well, it's going to be interesting because we're watching the screen, so we're going to know kind of what's going on, but
I'm going to try not to look.
It's going to be hard.
So if you didn't, for some reason, whatever, follow along, we just bought calls. So
yep,
we want those candlesticks on that monitor to go up. And if they're going down, it's not a good thing.
Nope. So this is actually really interesting. We've never done this before.
I know, it makes sense. All right, you want to talk about a quote?
Yeah, I do actually.
Pull that quote up.
Oh,
Which phone? What time frame is that on?
This is the 1 minute, and then up there that is like the market leaders in the SPY. So like Google, Amazon.
Okay.
Apple,
good for the audience to know.
Yep. All right. So I want to talk about this quote I heard in a book, and it was people choose a sure gain over a lottery to the upside, but they will choose a lottery to the downside opposed to a sure loss. Now, this quote that I said is kind of a mouthful, and it's kind of hard to wrap your head around. I know when I first told it to you, I kind of had to re-explain it because the way it's worded is a little tricky. And when I read it in the book, I had to reread it like 5 or 10 times. And we're giving credit where credit is due. I read this in the Market Wizards book by James D. Wagner, and I may have pronounced his name wrong. However, what that quote, this quote really kind of stood out to me because it illustrates what kind of like the beginner stock trader. And I remember when I asked you the question, you answered correctly. And what was the type of scientist that there was this decision theorist. So an actual study was put into this with real people, and they pretty much asked people, I'll kind of elaborate on what the quote was, is would you rather have a sure win or a lottery at winning 5 times more money or breaking even? So you can either take, $100 now, or you can have a chance at winning $500, but you might make no money at all.
Okay.
So what would you choose?
Have the chance at winning 500.
Okay. And then for the downside, would you rather have a secure $100 loss or the chance of making $0, breaking even, maybe even making a little bit of money, but now you have the opportunity to lose $500?
Do you want me to answer?
Yeah, what would you do?
The correct answer?
The correct answer, yeah.
I'd rather just secure that $100 loss.
Okay, so now this quote, there's so many ways to look into it because it really, what it illustrates is that the natural human behavior, natural human tendencies is exactly the opposite of what you want to be doing from a statistical standpoint when trading, right? Because in trading, you want to maximize your gains and minimize your losses. And what you're doing when you're taking a sure win, you're minimizing your wins. And when you're letting yourself take a lottery at a loss, you're maximizing your losses. So in the long term, you're actually putting the odds of making money against you, right?
Yeah.
So, but one of the reasons why, decision theorists believe that people do this is because people want they have the difficulty of thinking in the long run, right? So logically, if I ask you, okay, Mark, would you rather make 25% on your account all year? Or would you rather make 0% on your account all year? Well, you would obviously say I'd rather make 25%, right? It's money, right? That's the goal. That's why we trade. However, when you have a losing position, you have two choices, right? You can either cut your losses or you can go against every trading rule and let it run with the chance that maybe you recoup your losses. So that's where, in essence, it comes in, taking that lottery or taking that short loss. And same thing, when you're up on your P&L, when you're up on a position, you can okay, I can either let this run to my target or I can just cash in, right? Take that money right away.
Yeah.
And typically, beginner traders, what they do is once they see green, they'll take the green. And once they see the red, they'll go, oh, shoot, maybe this can come back. And then they end up taking a bigger loss.
Yeah. So a beginner trader, say they're up $100, but there's another $400 in upside, 400 left to be made, but like you said, they're going to take that $100 loss. But if they're down $100, instead of just taking that negative $100 loss, they're going to hope that they'll recoup the 100. But
yeah,
that's, again, it's everything. I guess it's all an odds game, trading.
Yep. Totally.
And you're just stacking the odds against you. So I think it's a really good quote. And this segment, this last couple minutes might be a little bit much to take in, but go back and listen to it, and I think you'll understand what we mean.
Yeah. I mean, it's because
it's a straightforward concept, but
yeah. But it's so hard to actually execute
and implement.
And I mean, that's why it's so essential to have a trade plan and a trading strategy, because that's where you implicate, where am I letting my winners run and where am I cutting my losers short, right?
Yeah. And so the trade that I have on right now, I have no trade plan. I've just coin flipped to figure out, whether I was going to buy a call or a put. And so
yeah.
I'm pretty much giving you a prime example of what not to do, but what most people who start out do.
Exactly. I mean, this is what I sure remember when I was a beginner trader, like looking back on why I took trades was pretty much a coin flip. I remember one time I bought Netflix just because, like when I talked, this clip blew up on TikTok. I talked about why my first trade, I bought Peloton because it was down.
Yeah, that was it.
It was it's cheap. I'm going to buy it.
What's down right now a lot? Oh my God, BBBY.
Oh,
did you see what happened? Bed Bath & Beyond.
Yeah, I heard about that in the whole Wall Street's bets group.
It was on WSB. People were talking about it.
I mean, it was on the news too. It was a pretty major and unfortunate event what happened.
Yeah, so let me read this. This was from an article. Someone sent me this morning. So the pretty much to summarize, BBBY is down. Well, it's at $8 a share right now, and it was at $30 a share.
Oof,
a couple weeks ago.
Ooh, big oof. Sucks.
So the CEO. No. Hang on. What was the official role of this gentleman?
I believe it was CFO.
CFO.
Okay, Bed Bath & Beyond CFO jumped to his death after this incident. So less than 2 weeks before his death, Arnold and billionaire investor Ryan Cohen were named in a class action lawsuit accusing them of insider trading and securities fraud during a meme stock rally in August when BBBY shares surged 400% from a July low and then cratered as news broke that billionaire Cohen sold his entire stake in the company. So BBBY pumped. He sold his stake in the company at that high. Okay, now the company was in trouble for insider trading and securities fraud. Since then, has sold off down to $8, which whatever the percent equivalates to. Guy, unfortunately, couldn't handle the stress. That news came out Friday. Stock's down 16% today off of that news. Jeez. Now, I know I'd never trade off news, but I mean, for the podcast sake purpose, I think it's something that is, I mean, it's obviously terrible what happened. And it just shows that there's a lot of stress that comes with kind of the job when it comes to managing money.
Oh my gosh.
Or getting in trouble for insider trading.
Yeah, I mean, that's next level. It's so, and that type of shift is insanely dramatic. Like, it's a very rare and kind of a freak accident what happened to him and I mean, there's no like weird, unethical things that the CFO has been involved in. So it wasn't like he necessarily tried, like it doesn't seem like he went out with the intention to pump the stock and dump it and make all this money. I mean, we'll never know really, but it's sad. And
okay, I want to say something. There's definitely hundreds of articles with both opposing sides with this whole story. We're speaking on just the brief headlines we've seen. Mm-hmm. So, I mean, there's obviously pump and dumps. There's short squeezes.
Yep. You don't really see pump and dumps with billion-dollar corporations, though. It's normally like a meme coin or a meme stock. Meme seems to be used interchangeably, but with a company like Bed Bath & Beyond, and now I think because of that, we were reading that they're closing down a lot of their stores.
Wow.
Like laying off huge amounts of employees just due to...
Yeah, sorry to interrupt. I had first heard about BBBY when I was on vacation. My brother told me about it. He's like, hey, have you seen the recent Wall Street Bets pick? I'm like, he's like, Bed Bath Beyond. I'm like, no. Like, what's going on with them? They're like, oh, like they're doing bad. So like they picked out, they're manufacturing this squeeze next. And I'm like, that's cool, but we don't do that. Like, that's not what we do here, but that's still very interesting. So to see it roll into what it's become now, it's rather sad.
I mean, it's also what your brother said is interesting because as a trader, you have to think about, okay, what is the short interest and what is the long interest on the stock? So how many people are short and how many people are long? Because what happens is when a stock, let's say a lot of people are long, it starts to deteriorate. People are going to have to start covering their losses by going long, which inversely pumps the stock beyond the value that it was going at anyway. So same thing, if a lot of people are going short, it goes up. People are going to have to cover their positions. So same thing with both ways. What happened was, appeared on Wall Street Bets that you were showing me Discord, what was that earlier of like people, oh my gosh, this guy bought like 700K.
Oh yeah. Well, whether it was shares or whatever, they try to keep the hope going.
Yeah.
A lot of hopium is involved.
Right. So it's like, that guy who's buying 700K in stocks, now he has to cover his position and cut his losses, which in turn he has to cover by buying and going even or flat, which will go, make this. So that's another thing. Look at key levels, right? Highs, lows. Where are people's stops? Where are people buying limit orders? So
what are you trying to say? Like, are you saying that
I'm trying to say one of the reasons why it probably went so low is because there's a lot of long interest, and as it started going lower, people had to cover their longs.
Yeah, and that just seems to be the typical pattern that happens with all of these. Like people, it's hope. It's a lot of hope, and it's a lot of people that jump in too late think they can make money on a day like today. I'll buy calls. It's going to go up because everybody else, this guy put 750K, it's going to go. Right. And then it's down 15% today.
Yeah. And that's why it's hard to really base yourself off of, like the Wall Street Bets group.
Yeah.
And they've gained a lot of credibility because of like, the whole GameStop thing and people becoming GameStop.
Even then, the real guys who made money off that, like, were in early. Again, it's that manufacturing of the hype and everything that went into that. You can look into the guy who started it. It was next level something, the name of the guy who really started the hype behind GME.
Yeah.
Yeah.
All right. Okay. On to the next topic. I don't want to drown on there for too long.
Okay.
We were going to talk about Elon Musk a bit.
Oh, right. That squeaking Tesla.
We talked about Elon Musk on Twitter.
There's been a Tesla who's been freaking out in the street, honking its horn. So.
Oh, yeah. I did hear that. That was a Tesla. That's funny.
Yeah. So thank God it stopped. But yeah, sorry. I'll let you continue.
Elon Musk. Okay. Obviously, he wanted to buy Twitter. It was pretty impulsive.
That's quite the impulse buy.
Yeah. $44 billion
company.
He just sold nearly 7 billion worth of Tesla stock. Okay. And Tesla dropped a couple percent. So you obviously, I mean, you've added this, so I want you to talk about it.
Yeah, I did some digging on the whole situation because it's very interesting what happened. So, Elon Musk wanted to buy Twitter. It seemed kind of impulsive. And what happened was that his whole impulsivity is coming up in the court case, what lawyers are saying. I was also looking into what legal experts are saying, how much ground does he have? Because right now, Musk and Twitter are going to court because they signed some type of deals saying that Musk was going to buy it, and now he's backing out of the deal, saying that there's a lot of bots in Twitter. However, on the other hand, Twitter's saying there's no more than 5% of the bots being users. However, Musk believes that it's somewhere around 20% due to the fact Twitter being one of the largest social media platforms with bots. However, no one's the CEO of Twitter isn't confirming it. So there's kind of in this
So fake accounts. So
Yeah.
obviously the evaluation was based off of users, but if 20% of the users are fake, then it's going to change the evaluation.
Exactly. So now Musk is saying, all right, I want to get out. But now Twitter's saying, hey, you agreed to buy this. Now you have to follow through. So now they're actually going to court to seeing what Musk is going to have to do. And it's kind of this whole legal argument of, can you force someone to buy something? Right. However, if they're not able to force them to buy it, there's going to be some billions of dollars in some type of fee from terminating the deal. And actually, I did some digging, and there was a company where this actually happened to. It is somewhere down here. Okay, so Apollo Global Management, which is a hedge fund, back in the late 1990. Don't quote me on that. However, this did happen. Apollo Global Management ordered by a Delaware judge $6.5 billion to buy Hudson Corp Chemical Company. However, Apollo backed out and had to pay a pretty hefty fee. It was in the hundreds of millions, if not billions of dollars.
Really?
So kind of same thing we're seeing here with Elon Musk, and where he is backing out of this deal. And in turn, he did a lot of damage to the Twitter stock, right?
Yeah.
So now Twitter's saying he's responsible. He's going to have to pay for those fees, whether it's going to be fees for terminating the deal or whatnot. But now the whole thing is he just sold $6.9 billion of Tesla stock.
Why?
Okay, so this is why he did it. So because of the deal, they're not sure if Musk is going to be forced to buy Twitter because there's no legal precedent set.
Okay.
However, what happens is if, let's say, because the trial's in October. However, it's uncertain how long this trial is going to go on to. I mean, trials go on forever, right? So Musk is avoiding the judge ordering him to buy Twitter and then create some type of force of sale on Tesla stock, which would, Tesla's his baby. Like, he doesn't want to be forced to sell Tesla stock in order to buy Twitter. So he's doing that preemptively in case of him having to protect Tesla.
Okay, interesting.
Which in turn dumped the stock 2-3%.
Okay.
Which is insane that that only dumped it 2.3%, $7 billion.
That is actually interesting. I mean, it's less of I guess I think it would more create fear in investors, and investors would sell off their shares.
Well, that's the thing, is like Musk isn't selling on a fundamental basis. He's selling based on this is, I'm doing this to protect the company in case some type of force of sale is put on Musk where he has to sell Tesla in order to buy Twitter at a bad price, right? Because
so he just needs more capital.
Exactly. Oh, yeah. And that's a whole other thing is like, why is Musk backing out of the Twitter deal? He says it's because of bots, but is it because of money? Obviously, $44 billion ain't cheap. And
even if you're worth 200 million.
Yeah, 200 billion, 250 billion.
200
yeah,
billion.
which is
250 billion. Okay.
250 billion, yeah.
So it's less than 25% of his portfolio. Yeah. His net worth.
Right.
Still.
But what he's apparently leveraging his Tesla stock. So he's using his equity in the company as collateral against some type of loan. And then he's also brought up all these small loans, billion here, $500 million there. And
small.
Yeah.
$500 million.
Half a billion there, whatever. Pocket change.
Oh my word.
To pay for the company. So it's kind of all up in the air right now. We'll see what happens. That would be pretty unreal if a judge forces him to buy it. Like, is that really ethical to force someone to buy something?
Interesting.
But yeah, we'll see.
This is an interesting topic. The average net worth of the top 1%, right? The 1%.
Yeah.
What do you think it is? All right. The minimum net worth of the top 1% is roughly how much in dollars?
I actually don't know. Is it
Minimum net worth of the top
Net
1%.
okay?
What do you think?
It's definitely higher. Well, I've read the article because I found it, but
I haven't
it's
read it, so
higher
let me
than I thought it would be. I thought it was
It
somewhere. I thought it was somewhere in the 450 to 500K range.
400 to 550K in net worth?
Yeah, definitely.
Oh,
not
net
like
worth. No, that's what you make yearly.
Oh, okay. I'm
Yeah,
talking
yeah.
about net worth, like
that. Okay,
how much someone's net worth is, the top 1% of people.
I'm gonna guess 3 million.
3.
3.
Any other guesses? 5? I don't have a guess. No guess.
Okay.
Fair. Okay, 11.1 million.
11.
That's high. 11 million. 11.1 million
Definitely higher than I thought it
is
would be.
the minimum net worth of the top 1%. Sorry, not average net worth of the top 1%. The minimum net worth to be in the top 1%. 11.1 million.
Do you have the yearly salary down there?
It is there.
Yeah. Okay, so a person would need to earn an average of $823,763 per year in order to jump to the top 1%.
Which is what?
That would be over.
That's
Like 10 plus years, obviously.
That's competitive. It's gotten really
You
competitive.
got to make almost $1 million for 10 plus years.
And what's the mean average? I think I looked this up recently. Like the mean average of American income salary is like 50,000.
Let's see. These stats are always so interesting to me, and they're constantly changing. I need to find 2022.
But that's such a huge gap.
Okay, according to the latest data from the U.S. Bureau of Labor Statistics, the annual mean wage for a full-time wage or salary worker in the United States is $53,000 per year.
I mean,
That's interesting.
yeah, that is 50 to almost $900,000 is quite the wage gap.
Yeah. This is interesting too. All right. Average. Yeah, it's about the same. Okay. 2020, I was looking 2020 versus 2022. About the same. The widening gaps in wealth and income stem from a variety of factors, including the wealthiest increasing dominance of the public and private equity and tax breaks.
Say that again.
Okay. This is part of the top 1%.
Oh, the article.
Okay, the widening gap, like that insane gap between someone who makes $53,000 a year and someone who makes $823,000 a year.
Mm-hmm.
The widening gaps in wealth and income stem from a variety of factors, including the wealthiest increasing dominance of public and private equity and tax breaks.
I mean, tax breaks make sense because once you make money, there's a lot of ways to be creative with taxes, right? From tax write-offs, especially when because the people who are making all that money, they're not employees, right? They own their own companies, they own equity, they're in some type of form of investment. And inside of those industries, there are plenty of ways to write off taxes. Well, if you're working a 9 to 5 or some type of salary, you're pretty fixed on what you can write off. Because let's say to grow your business, you need to incur $1 million in debt just to grow some type of investment in or some part of your company, right? Mm-hmm. You can write off that full $1 million. Obviously I'm not an accountant, so what I'm saying might not be, I shouldn't be quoted on, but I'm pretty familiar with how to write off taxes because I've done it. I know you've done it. Mm-hmm. Maybe, do you want to talk about how you wrote off your G-Wagon? Maybe that kind of ties into it.
Yeah. So I bought a G-Wagon for around $200,000. And so the G-Wagon actually falls under section, I think it's 179 in the IRS tax book. And it's a certain set of vehicles, I think it's 12 to 15 vehicles that are over 6,000 pounds qualify for this deduction, which is 100% depreciation in the first year and then like an automatic write-off of, I forget the exact amount. So you can write off 100% of it in the first year to offset whatever your income is, your actual profit.
It's pretty nice.
So what's a good way to explain it? say you make 200,000 profit in 2022, and you buy a G-Wagon at the end of the year for 140,000, then your actual taxable income is going to be 60,000.
Yeah.
There's different ways you could structure writing it off, but that's what most people do.
Interesting. And then in order to do that, do you have to have an LLC, a corporation? How does that work?
I'm assuming. I mean, I don't know actually. I
you
can't
don't?
speak on that.
You just have an
I
account.
forget. I don't know if my accountant deals with all that, so I really don't know the specifics. I don't know if you could just be an individual and write off that, but I don't know.
Yeah,
Probably an LLC.
I kind of asked that rhetorically,
idea.
but you do need some type of legal entity that separates you.
I don't know if it's a business or personal. Is Section 179 personal or business?
I was just looking at it. Let me see. Just to make sure you were correct on what you were saying. I'm not saying anything about weight.
6,000 pounds.
Yeah, I know that's a fact.
At least just in the quick pop up on Google. Give me a second.
But I mean, that shows the importance of getting a good accountant, right?
Anyway, yeah.
I mean, that saved you hundreds of thousands of dollars.
What was your question again?
Section 179, is it personal or business? Like, can you take it?
This says it allows businesses to write off the full price of
sense.
any qualifying piece of equipment.
Okay, so it's
Businesses,
that makes
probably.
sense. So you have to have an LLC or C Corp or something like that.
Yeah.
Which I have all of the above and multiple. Do you have any entities?
Me? Yeah, I have.
Yeah, you have an LLC.
Yeah, I have one for working with the daily traders, and I also have one for my investments in the stock market and trading.
Yeah, so I mean, LLCs provide
LLCs.
variety of benefits, including legal protection and tax write-off, tax benefits, and a whole bunch of other stuff. So most individuals, depending on what you're doing, whether it's like consulting for a company or if you're a trader, you'll have an LLC to write off, maybe your monitors, different equipment. I think there's a maximum you can write off as personal when it comes to like business equipment. So if you work for yourself, not under an LLC, I think it's like $400 you can write off in business expenses.
Yeah, LLCs are different. Corporations, you definitely have more room in terms of what you can write off. And then there's S Corps and C Corps. S Corps, I kind of remember like S for start, because your S is your more basic and your C Corp is your more professional, larger. So like, more complicated. So I believe S Corp, you can't have more than 100 members and they all have to be held nationally inside the US. So there's more restrictions in that regard, but there's more flexibility with what you can do with tax write-offs.
Yeah. Okay. Yeah. No, I have a C Corp.
Nice. There you go.
Again, I have like a large legal team, advisors, and they all deal with that stuff.
It's kind of a brainful. Like, I mean, obviously it just shows the value of delegating, right? And off-putting work to other people. And like, I mean, how much do you think you've paid in legal expenses just to get all of your corporations, your LLCs,
God,
your
lot.
accountants? Like, how much do you pay your accountant an hour?
$500-600 an hour. My lawyer, you want to know what that is hourly?
How much?
Pay $968 an hour
No
for
shot.
my attorney. Yeah,
That's pretty good.
mm-hmm.
And how worth it is that?
It's very worth it.
Right. So
Makes me unfuckable.
I
like being able to say that.
well, it gives you security, right?
Yeah, no, it's all about
Just knowing that
security.
Yeah, it's kind of like now you know the unknown. Like, okay, if this happens, I'm legally protected in this regard, but XYZ. But so I wanted to we mentioned if you would ever get an electric vehicle. We were talking about how I might get a Tesla Model 3 Performance so I could actually beat your McLaren.
Yeah.
And then, so now there's more California bans gas cars by 2035 articles. However, they said that, and now California is under a pretty gnarly heat wave, and they're telling people not to charge their cars during peak hours, which is pretty funny. So now it kind of raises concerns of, okay, if we can't support the electric vehicle market now, where electric vehicles are pretty unattainable to the average, middle class, working American citizen, what's going to happen in 10, 20 years when most people have them and they're mandated in California, where you can only buy electric cars new?
Wow.
what is the power grid going to be able to sustain that?
The power grid, yeah.
That's
That's their problem because everyone's cranking their ACs.
exact because it's super hot.
Ah, wow. That's a dilemma. There you go.
They're running into an issue, and also it's like global warming because they're their whole thing is. I mean, let's not get into the debate if global warming is real or not. Stay away from that. But like, assuming global warming is real, it's because of emissions, right?
Yeah.
And the whole point of electric vehicles, they're cleaner energy. The world is it gonna keep getting hotter, and then California just gonna be getting screwed more and more on the electric grid. And
That's
then,
interesting.
And then lithium too with electric vehicles, because now, I mean, Elon Musk, I saw a quote where he's actually ashamed of, or he's not ashamed, but he's not happy with the amount they have to charge for a Tesla due to the amount of expenses they've incurred due to increasing prices in car parts such as lithium, which is obviously in such high demand. And one of the biggest issues with that is so in order to create like a mining lithium operation, it takes an average of 7 years. 6 or 7 years to get approved by the US government in order to actually put these projects in place.
Wow.
So it's like, it's just delayed. And Australia is actually the biggest manufacturer of lithium because it takes their projects an average of 1 year to get going.
Wow. Okay.
So there's
interesting.
This huge demand for lithium, right? New electric vehicles, but they're not producing it fast enough. And it's lacking because, all these huge lithium projects that are trying to get up and going are being slowed down by government policy. Which actually I was looking at lithium ETFs the other day, seeing what they're valued at. And
the market's down.
I know. I was just looking at it. I was like, but who knows? Maybe they'll lower interest rates and we'll just skyrocket. That would be nice.
Sorry, go ahead.
But,
I completely interrupted.
So no, I'm looking at these different ETFs, and then our editor sent in this article, which was very, very interesting. And it was about Michael Burry. Am I saying that right?
The Big Short guy.
Did you read that?
Michael Burry.
Did you read the article?
No.
I don't recall an article being sent in about
I didn't
Michael
see
Burry.
that.
Okay, well,
article.
maybe it was you, Cody. I don't know. Someone sent this in.
Yeah, I think it was Cody.
Okay, maybe it was Cody. But okay, good job finding this article because it's super interesting. And what it talks about is Michael Burry. Have you watched the movie The Big Short?
Yeah, of course.
Really good movie. I recommend watching it for anyone who's interested in stocks, finance, business. It's super interesting. He pretty much called the housing market crashed and the crash of the stock market due to banks over leveraging themselves, these risky loans. And now he owns his own fund. And it was just reported that he is pretty much flat. He sold all...
Oh, he's out of all of his positions.
Yeah, he's out of... They just sold...
There's one stock he's holding.
GEO, which is a prison... I can pull up the article. Invests in private prisons and mental health facilities, which is interesting. Like, this is the one... let's
look up GEO.
Yeah, I'm really interested. I'll just take out my...
I do remember seeing this article now in the show notes and thinking, that is interesting.
GE. I read the whole article.
Yeah.
I read the whole article. I was like, okay, so what? There's one hedge fund owner. Can we go to a larger time frame? Can you do it? You have the mouse right there. I was like, okay, what's the big deal? This one, because I didn't recognize the name right away. I was like, oh, what's the big deal? It's one fund owner selling all this stuff. Okay, yeah, so it's doing definitely relative strength compared to the entire market.
Neat. I mean, it's cheap. $8 a share.
Yeah, I mean, what's the market cap?
That seems so weird to only hold one stock in your fund and sell everything else.
But it's just so scary because this guy called it last time. So I mean, what are the odds?
You think he sold off everything because there's a recession coming?
Yeah.
What is this company? I don't care about fundamentals, but when it comes to something like this,
it's the prison and mental facilities one.
So why fundamentally would that?
I didn't look into it. You want to do some research while we're talking about why he thinks this company is so great?
Into GEO.
GEO.
All right, look into it.
Yeah.
I'm editing photos over here from our shoot on Thursday.
The heli shoot. That was fun.
Oh yeah, that was
Quick switch of subject.
I was going to talk about
we fly helis around all the time,
I'm over here,
Yeah.
but we don't take photos every time. But I'm over here cooking up in Lightroom, so
nice.
I'll pop a few on the screen.
Those are some really cool photos.
Crazy heli shots.
Yeah,
helicopters are fun. If you haven't been on a helicopter, go on a helicopter.
We now have a catch-up helicopter.
Yeah, we have a red helicopter now.
Yeah.
Before it was a yellow one, and now it's red.
Yep.
Ketchup and mustard helicopter.
Yeah, and the helicopter lender, what would you even call them?
Broker.
Our helicopter broker is
Our helicopter connect.
I don't own the helicopter. Let's clarify that.
yeah.
We're gonna clip this and put it on TikTok,
own
and
the
people are gonna
helicopter.
freak out.
Oh my God, I don't own the helicopter. I do want to buy one, but it just doesn't financially make sense when you can just rent the helicopter out, charter.
I'm gonna destroy you
People
for that
get
one.
so pressed over me saying everything's rented, but yeah, broker, helicopter brokers, whatever. It's like chartering a private jet. You just pay to fly it, and it's like makes more sense than actually buying one, which is $500,000 to $1 million easily. But I think I will when it makes sense. When I need it, when I need a helicopter to commute to work every day, then it would make sense to own it.
Well,
but just chartering one now makes sense.
Well, we were
need
flying
it.
in the heli going over some beautiful area, about an hour drive, like an hour and 20 drive from our office now.
Mm-hmm.
And we asked the pilot, and we were like, "Oh my gosh, like these houses are beautiful. Like we need to have one of these. Like,
Yeah.
this is like it looks tropical, even though it's like one of the most northern parts of the U.S." We're like, "Oh, how far of a helicopter drive?" He's, "Oh, it's like 20 minutes." And we're like, "Oh my gosh."
Yeah,
So who knows? Maybe a helicopter might be an up and coming purchase.
for consistency to get to the office.
Yeah, but we made a great connection with our new helicopter charter broker or whatever you want to call them, and we're gonna do some pretty. Now
gonna
we
do
have
some
like
fun
access
stuff
to the
with them.
hangar now too.
Yeah, we have access to all the helicopters, some private jets.
Yep, pretty good connection.
Pretty good connection. You emailed them. We're all set on that end, right? We got to schedule the next shoot.
Yes.
We're gonna go out and fly on some more jets. Where are we going? Miami for the weekend.
Miami, let's do it. We have a lot of good connections to Miami. Oh, that's what I was gonna talk about. Was my Miami business meeting that just went like.
Oh, from
Yeah, that was really
okay.
funny.
So wait, last episode you said you talked about
Yeah,
the
and
story.
I didn't even put in the show notes, but now, so good job. Yeah, I guess I'll talk about it. It's a pretty funny, unique business meeting.
You went to Miami for 3 days and had some meetings, and then continue.
Yeah, so we meeting a friend down in Miami, and we also, as a brand, have a lot of partnerships, and not necessarily any active partnerships, but a lot of great connections down in Miami. So I was going down just to meet with a whole plethora of people, from fund owners, other big social media brands, and high-level traders. Guys who are partners at proprietary trading firms, doing millions a year in trading. Just trading. So great group of people that I actually ended up meeting with, and one of these dates was interesting.
You got a date, one of your dinners.
Well, so what happened was the guy says, "All right, show up around 9." I show up around 9, and it's at a cigar lounge. So I get myself a cigar, and I sit down, and he doesn't show up for like 30 minutes. I'm like, "Oh, there's no way I'm getting blown off." And so he shows up around 9:30,
Okay.
and meanwhile, there's like all these beautiful waitresses at the restaurant, and I wasn't saying anything. I was just like, I wasn't gonna try to get any of their numbers. I was just sitting there enjoying the music. And also, there's another thing. So I don't smoke cigars, right? But I was going to like this cigar event. I thought it would be appropriate if I got one. So I'm looking at all of them, and I just picked the smallest one possible because I was like, I'm not even gonna finish this. So I'm just gonna pick the smallest one I can find. And what I didn't know, what I wish I knew, was that the darker the cigar, the heavier it is. So the smallest one they had was like black.
Oh God.
So, and like I said, I don't smoke cigars. I don't really know. And now I know it's like you put it in your mouth and you like taste it. Tastes like. So
Anything to fit in with the
yeah, I was just
high
trying to
net
fit in
worth
with the crowd.
individuals.
I was wearing a nice watch, dressed up in a suit because it was that type of event. And I go over. He ends up showing up around 9:30, and just before any type of business meeting I ever have, I try to establish friendship before because business is all about trust. And before I want to talk any type of money, I just want to become friends, get to know this person, who they are. So we ended up talking just about where we're from, our upbringings, funny stories for 2 hours before we even talked about a single dollar.
Really?
In business. Yeah. So now I get there at 9:30. It's like 11:30. It's a late event. It's Miami. Like people up to like 6 a.m. there. So wasn't too worried about that. And meanwhile, these two beautiful waitresses start coming over, and they're talking to us, and they're Ukrainian. And there was this ongoing joke between the two waitresses and the guy I was getting a business meeting with that he should marry our waitress's friend, who's also beautiful.
Really?
Because to get like sponsorship in the U.S. because of certain visas, and so it was like an ongoing joke. And it was kind of like the waitress and I were playing like relationship. What is it called? We were like playing like relationship maker with them.
Yeah.
And but then it started getting annoying. They kept coming over when it was like, because we were trying to propose a partnership deal with them.
Yep.
If you remember. And every time, like, I swear to God, every time I would get to the actual deal, these two girls would come over again. And I didn't want to be rude, so we'd continue to talk. And then it wasn't like you'd go right back into it. And then we'd start talking again. And we'd get right to the deal. And then they'd come over again. So we never like actually got to the point, like the whole point we were at the dinner. So now we're at this restaurant. It's like 12 o'clock. We've been here for 3 hours just talking. And then what happened was my cigar went out, and he asked the lady, so I was like, okay, I'll light up my cigar. And what I did was when the waitress lit my cigar, I fully inhaled it with like a full breath. And I don't know if any of you viewers have done this before, but it took every ounce of my willpower not to cough my guts out. And like it was the most painful thing ever.
Oof.
And yeah, that really hurt. That was not smooth by me. So my face was like turning red as like I was trying to talk in this meeting, trying to hide my pain. And after that, so then we talked. We finally got to the deal. We actually didn't end up making the deal, as you know, but we became really good friends. And I'll keep his name secret, but him and I are good friends. I text him, see how he's doing. Whenever I'm in Miami, I'm sure we'll connect again. And so at the end of the meeting, the two girls came back over.
Oh boy.
And she asked, so the guy I was at the meeting with, and then the waitress's friend exchanged numbers. And then the waitress asked me if I was going to ask her for her number. I was like, oh. Because I wasn't even thinking about that.
Really? Okay.
I was like, this girl's out of my league, whatever. Blah, blah.
Okay.
And so then I go back. We were staying in like this pretty awesome penthouse, right out of side of what is the Brickell Mall, I think, for people from Miami. Staying there, and I texted her. I was like, okay, whatever. I'm just gonna see if she'll want to get a date or whatever. And she said yes. I was like, oh
wow.
Like now what?
No way.
However, I was so tired because I didn't get back from that business meeting until 2 a.m.
Jeez.
Our business meeting went from 9:30 to 1:30, and then he gave me a ride back to. So if you're a guy you're getting the meeting with, girl getting the meeting with, gives you a ride back to your place, the meeting went well, in my opinion.
Oh yeah.
So he gave me a ride back, which was awesome. That actually happened with two meetings because I didn't have a car down there, I was Ubering everywhere. Two meetings, the guys offered me rides back to the place.
That's awesome.
So I got a ride back. Next day, I'm super tired. I wake up, text her, oh my gosh, I got this date. And then I'm so tired, I fall asleep, and I accidentally blow her off.
Oh no, you did not. Wow.
Because it was an early dinner, because she had work at like later. I fell asleep at like.
No.
Yep, so I just ruined it. I'm like, oh, and then I tried to text her back, and she obviously wasn't happy.
Oh. That's brutal.
Yeah, so I took a big L on that one.
But good trip overall.
Yeah, it was a great trip. I had so much fun. Made it like I'm so excited when we go to Miami. I'm sure not only are we going to get some great content, but I'm excited for you to meet all these guys because we've been communicating with all these guys over Zoom, text, emails, whatnot. But meeting someone in person is way more significant.
Yeah.
Than email.
Yeah.
So I'm excited to go to Miami with you.
I am too. Private jet's Miami.
Definitely. So I have an update on GEO. It's actually in the pod notes if you would like to discuss a little bit, but I will summarize. There's two pointing down arrows at the top, so you should be able to find it quite easily.
Okay.
Why did Scion, how do you say it? S-C-I-O-N? Asset Management buy the GEO Group? Basically, likely because the company's government secured cash flows, recession resistant business model, and incredibly cheap valuation.
There you go. That was it. 2 words. Recession. Well, 3 words. No, 4 words. Recession resistant business model.
Yeah.
That's why.
And then
that's why I bought it.
read that next quote down there. Below that.
I don't see
Even during a recession, demand for prison and detention space doesn't decline, meaning prison operators like the GEO Group are in the most recession-proof business one can think of, especially if one expects a major market downturn and growing economic headwinds. Yeah, he completely thinks the market's going to crash.
Yeah.
Yeah.
Wow.
And that's via seekingalpha.com.
Interesting.
Well, that is not a good sign.
That's not great.
Okay, so
But it doesn't affect at least what I do trading.
yeah, right. I mean, you're in and out of positions, and this is actually really funny.
Volatility's
Family members all the time are like, "Oh my gosh, like how are you doing? Like you must be doing
Yeah, I know.
terrible."
I've
And
been getting that too.
no, like I swing trade and I day trade, and they're like, "What's that?" I normally know what day trading is, but when I say, I mean, I'm sure,
trade.
when you say swing trade, it's like, oh, all right, here we go again. Should have like a business card, like, all right, this is swing trading.
I was trying to pull up some hedge fund numbers. I was looking the first half of this year, the average hedge fund was down over 6%, something like that, which is crazy. Like S&P's down, whatever, 10%.
Well,
Or,
I mean,
I don't know. What is it down right
Being
now?
down 6% in a conservative strategy on a market that's down, over 20% is not bad.
Well, it was probably down like 12% halfway.
Okay,
through the year.
but still,
no, it's not bad.
They're beating the market, which is ultimately the point of a hedge fund.
Beating the market, but still losing money.
Yeah, but to hedge against the market downside. But sorry, I'll let you continue.
No, you're good. I was
gonna
just, oh, no.
Justify
So
that number.
Well, do you want the actual
was-
percentage? It's
it's
18.57 year to date and 13.58 past year.
okay, that's the S&P.
Yeah.
The S&P's down 18% right now year to date.
18.57.
Okay, interesting. I was trying to pull up hedge fund numbers, like the top performing hedge funds, but I couldn't find any. Maybe they're all down so much. There's just no articles that like there's nothing out there. I found a couple.
Yeah, it's bad press for them.
It is, yeah.
I mean, if I was them, I'd imagine, if trying to sympathize with them, I would imagine they would want to be hiding those numbers as much as they could to protect themselves from, customers getting scared, people, because, if they say, oh my gosh, this hedge fund's down 8%, why would I want to invest in that?
Yeah.
Because
No, exactly. But I think it's cool to say like I'm beating the average hedge fund or probably all hedge funds. I want to go over my trade data. I spent some time this weekend kind of going over my numbers again. Last video, I
have something first though. I bet you could still see their trade history with the SEC because they probably have to give them
you
their
could definitely
information.
see it.
Yeah,
and then so you'd be able. They're not gonna publicize their numbers, right? But you could probably look into what they own and then see like when they bought it, if they're still holding it, whatever, and probably calculate where they're at.
Yeah.
Of course, would that be a lot of work? Yeah, you probably could do that.
I believe it's funds over the size of $100 million are required by the SEC to report their actions.
That's what I've heard too. I can
What they're
check
doing in
that
the stock
to be
market.
sure.
Yeah, maybe do a little Googling.
Yeah.
last episode, this was a couple episodes. Now this was a while ago because we're just putting clips on TikTok from like episode 6 or 7. Anyway, I was up 100% year to date on all the calls I took. That is no longer true. I am now up 87.5% on my calls that I've taken. That's my win rate on my calls. And my put win rate is 66.67%. So talking about hedge funds percentages, like the average, I think there's 2 different ways that you can kind of explain this. And I'm going to do my best to explain it. And okay, what we do when our marketing is like, okay, my call outs, what are the amount of gains that I've called out year to date, percentage wise? So people join at all different times of the year. Say someone joined a month ago, they got in on one trade that went up 50%. So we're taking our total gainers percentage versus our total losers percentage. And that number right now, year to date, is 230%. Okay, but if, say, I was managing a hedge fund, I had whatever $100 million in that hedge fund. And obviously it was just me, like literally just like, it was like me managing $100 million portfolio. Now, risk management, standard rules of risk management, you put on no more than 5% per position size. 5% per position size It makes it hard to, or pretty much impossible to blow up an account. Obviously, I post all my personal trades live, real time inside the mentorship group. Like that's transparency that I have. And I'm up 230% in gains, in percentage gains called.
Yeah.
Offsetting the losses I've taken. Okay, win rate 87.5% calls, 66.67% puts. Let's just say 5% taken, or we'll say, 5% taken on every position year to date. If I manage a hedge fund and I put on 5% of every position without going into like too much, just know there's millions, or not millions, there's so many variables when it comes to trading and calculating percentages, account sizes, how you manage a trade. But say it was me putting 5% on each position, managing that however I did, like how I've done this year, right, on each trade, and I put all the numbers in. It's pretty straightforward. But say 100 million, I'd have, if I had done 5% on each position, 11% gains year to date, okay, on the portfolio, if it was managed like that. Now, that's not how I trade or how I manage my portfolios. Because, well, just for basics, okay, if I have a higher win rate when it comes to calls, I'm going to put more money into my trades that are calls.
Yep.
If I have a higher win rate on a certain setup, I'm going to put more money into that setup. So my position sizes vary, and I trade very aggressively. But if it was a very just, simplistic strategy of 5% per size, 11% year to date, beating hedge funds, not bad. 10% year to date. 10% per position year to date, 22% in gains.
Yeah.
So I think the important thing is I don't want to be dishonest or misrepresent my trading. There's different ways you can look at it. And I think just, telling everyone maybe moving forward, just, recommended position size is 5%. This isn't financial advice, obviously. I'm not a financial advisor. I'm just posting my trades. But if you put on 5% per account size, you're more than likely, if I'm profitable, which I am, you're going to beat most, all hedge funds, or you're going to make money. At the end of the day, you're going to have a positive return on your investment when following my trade. So I think that's important to say. Again, if you want to put 10% on every call that I take, okay, you're going to have more, you're going to have a higher percentage in gains year to date. So you take 5% per size on puts, 10% on calls. Your actual trade management, you're cutting one at a certain percent, you're taking profit at a certain percent. Again, you start messing with the numbers and trying to squeeze the most percentage you can out of your profitable system. But if you have a profitable system, you're going to make money at the end of the day. And that's what people need to understand. Everyone wants to get rich overnight, get rich quick. That's great. But realistically speaking, just knowing that in the long term, or, generally just your goal is to beat the market at the end of the day, like we said, and beating the market is what I'm doing. So
Yeah. And
that was my spiel.
It's a good little spiel. Hey, do we
I
want
think
to take a
with
break?
that said, we should go to a break.
What are we at? What's our time?
Yeah,
It's
that felt
at
long.
an hour.
Yeah, so we're not
and
breaking.
3.
We're just going to end it.
We need to see your trade.
Yeah, well, let's do it. We don't need a break
Okay.
at an hour.
Do we just rip an hour and 3 minutes?
I knew we were at an hour. I didn't plan on breaking.
minus 6 minutes because we were preparing still.
If I would have break 30
right,
minutes ago. All right.
Yeah, you just kept going, and I just didn't feel like.
Okay, well, it's
interrupting
definitely
you.
down.
No, it's good. I like managing the pods.
It maybe would have been up for a little bit there.
Yeah, it might have been up a couple. I don't think, because it's 2 weeks out and it's in the money, I don't think it's going to be down tremendously. Maybe 10%.
Okay, ready?
I may or may not have got food delivered, so I'm gonna go get it.
All right, I'm going to check it.
Okay, have fun.
All right, ready? Are we ready to see how much I'm either up or... Oh, Josh is calling me.
Wait. Live call with Josh.
Josh,
Dude, you didn't have to buy me a fucking laptop.
you got it?
So sick.
What good timing. That's funny.
This is literally croaking right now.
Bro, this is crazy timing. We're literally filming the podcast right now.
Are you on it?
Yeah, we're live on the
Let me say hi to
podcast.
Josh. Josh Burry,
Podcast.
what up?
Hey, screen record.
I am.
Unless he's shirtless.
No, he's good.
I was trying to call you guys after the podcast because I didn't want to interrupt it. Thank you so much.
Of course. Listen, you deserve it. That's from everyone. Thank you for everything you've put in. It's sad you're gone. You're in Florida, but we're missing you.
Yeah, we are.
And yeah, thank you. You deserve it, Josh.
Yeah. What? Hope you guys come down soon, but I might have to be driving up, like a U-Haul for someone. Like they're paying me to do that.
Okay.
So I might be up then, but I'll talk to you after. I'll let you guys get back to the podcast.
All right. I'm glad you got it. All right. See ya.
Awesome. Later, Josh. That's funny. That was nice of you. That was not planned, by the way.
That was
No,
not
that was
planned.
not planned.
was
We
not
were
planned.
literally a minute away from ending.
Yeah.
I'm so happy.
Okay.
He missed signing it. It was supposed to come on Saturday, and he wasn't there to sign
Oh,
for it. It got
really?
delayed to today.
Huh.
It's funny. All right, let's see what you call out.
That's awesome.
Or you're not call out your gamble.
I'm probably down. Yeah, I'm saying I'm down, right?
I'm saying 10%.
QQQ. Oh, we're down.
How much?
Percentage or money?
Actually, wait. Let me change because I thought it was SPY. I don't know why I got this. 15.
You think I'm down 15%?
15%? Yeah.
I have to guess.
Guess.
How about 12?
It's changing. It's going in someone's favor.
18%. 16.5.
God, 16.5. What?
13.19%.
Oh, I win.
I said no. I said 12.
And didn't you said 12?
I said 12.
You said 15. No, you said 13.
What did I say?
Oh my God! You said
go back.
You said 13.
Yeah, 13.5. Yeah.
With
Okay.
that said, we would like to mention
that was
the
good.
sponsor of
was a good
today's
guess.
episode.
Down $182.
Oh, it's not bad.
That was fun. Oh, I gotta close it.
No, let it run. Let it run, bro.
Let
it'll
it
come,
run.
It'll come back.
That's good.
If we pray hard enough, it'll come back.
Oh God! All right, yeah. Thank you
nice
for
little
today's
tick up
sponsor
there.
of the podcast. We finally got a sponsor. Do you want to run with it?
Wait, what?
You know the sponsor.
Oh, the Daily Traders.
.com.
.com. The largest trading mentorship group out there right
Yep.
now. If you don't know, we are making huge moves inside the stock education world with our new ultimate mentorship group. We are bringing. We still have no name for it, but we are bringing on board the best traders in the industry. We are leveraging our following to get access to this knowledge that has never been seen, heard before, and it's going to be game changing. And I'm excited. I know you were excited.
Very excited. If you want early access, I mean like 2 months early access, join the mentorship group because you'll get that first access.
And a deal.
It's kind of like a beta group. We're going to run it for a couple months as purely giving access to the students in the mentorship for a deal as well. So yeah, first link in the description. Check it out. Come beat hedge funds with me. And with that said, we'll see you all in next week's episode.
Awesome.
All right, later.
Thank you guys.